Words perhaps sometimes cannot capture how excited we are to have Mr. Rakesh Jhunjhunwala on ET now. He's one voice people really look forward to hear and understand his views on market and economy and also on life. He is someone who has really taught me personally that how you can be successful and also live a simple life. He's just turned 60, so we'll certainly go beyond market and talk about how will life change for Rakesh Jhunjhunwala now that he's 60. Mr. Jhunjhunwala, so good to have you back on ET. Hope everything is fine and safe with you and your family.
Yeah, thanks for inviting me, and so far so good.
I'm going to start our today's interaction with a quote of yours, which is, bull markets always climb the wall of worry, and when you see a lot of worry in the world, you get excited. March was when everybody was worried. Right now looks like there is no worry in the world. So do you think markets right now have only normalized or we've extended ourselves?
No, whether I watch ET now or any channel that I watch, there is only worry, I think. There is a lot of disbelief in the market, and we have gone through the classical birth of a bull market where there is a sharp fall and there is a sharp recovery, right? And everybody is dumbfounded. Therefore, nobody believes in the rise. I don't think any of the people I meet or I talk to when I watch the television, nobody is believing in this market, right? And second thing, I feel this market is, in 2002, I wrote a piece of article in the Economic Times that India is on the verge of a secular, structural and secular bull market. I think I feel like writing that article again. I think, this bull market is not only going to be about the stock market, it's going to be about India. People are going to be surprised at the way Indian growth is going to recover and how it is going to sustain and further recover. That's my personal opinion, right? I mean, I differ from most Indians on it, and I reserve the right to be wrong.
But suddenly, nobody's worried about the COVID cases, at least, both locally and globally. There is a rise, but markets are not focusing on it.
See, the markets are not only valuing what the earnings are going to be in the immediate future. What relevance is if I have a company which I know in my judgment, which could be wrong, is going to do extremely well in 21-22. So whether it earns 8 or if I think it's going to earn 30 next year, this year it earns 15 or 12, what is it worth? And surely the dire predictions of the COVID are behind us. As the COVID is developing, at least it is getting milder. And also people are learning to treat it better, right? And the percentages of deaths are coming down. So it is like something like smallpox, polio, it will pass us. We learn to live with it. After all, what is it? It's a flu, it's not a cancer, right? So I think that is what, it's not that COVID is going to be the impediment in the progress of humans or economic progress of humanity. It's not it's not as much a changing event as it was being predicted, according to me.
So what, to your mind, Mr. Jhunjhunwala, will be the shape of the recovery? Will it be a broad-based recovery? Will it be a nuanced recovery?
Well, I think, see, the sectors which have been hit the most are hospitality and restaurants. There, the recovery could be gradual, right? But I can predict one thing to you, that people are, a lot of restaurants will close, but a lot more will open, let me tell you, right? So those industries may open a little later. I think others will return to normal quite fast and with a vengeance.
So where do you think this crisis is going to leave scars and marks which would be permanent in nature?
Well, the scars and marks, I don't know. It's not a war. War has no victors, it only has survivors. But it is going to leave a lot of learnings. First learning is we have to invest more in healthcare. Second is we cannot take these things lightly. Right? I think these are the two lessons we have to learn. And I think we can't keep defying nature beyond all points.
In media, we extensively spoke about when GST was to be launched, when RERA was implemented. But government in last 2 weeks has done two reforms, one on labor and second on APMC. Nobody's talking about it.
Well, that's good, no? People are not realizing the consequences. I think it's very, very significant. And also when the government is talking of the electricity reforms, along you saw today business and headlines, they're auctioning 38 coal mines without any requirement of usage norms. I think everything, IBC, GST, RERA, labor reform, then this agriculture reform, then I think they come up with agriculture reform, which is path breaking, selling of public sector units. So I think all this will add up. And see, what India needs is ease of doing business. I have inherent faith in the ability of Indians, to capture opportunity once they are given it. You create ease of doing business. And you look at it this way, Nikunj, I think software exports in India will grow at least 10 to 12% a year, the way the world is getting digitalized. And it's too late for any country to challenge India in this. And whether Accenture does it or Infosys does it, what's important is it should be done in India. So the value added is so high, right? Second, I think India is going to be one of the farmer capital of the world. I have no doubt about it. I think agriculture reforms are path-breaking. Are you aware that milk is an 8 lakh crore crop, greater than all cereals put together, right? And there is no restriction on who can buy, where he can buy, where he can transport, whom he can sell. Same thing we are applying to agriculture. A lot of people say it's the 91 moment for agriculture, right? Then, why will manufacturing not come to India? First, you have an import duty. That's a barrier for a person who wants to import. Then you have good, very flexible labor laws now, right? You have land available. Every state government is ready to give land. Electricity is not a problem. There is no shortage. There is abundance of workers. There is hire and fire. Then why will manufacturing not come? Cumulatively put to this with the reforms that have come. And the best thing is that corporate sector integrity. All this coming together, I think that's what market is recognizing. Once all this comes together, it will explode. And then the path is only upward. And as an Indian, I'm proud that for the first time, we have done some aggression against China. And we have captured a very vital point, which is hurting China's ego. So that makes me very proud as an Indian. So I envisage India, which is in the next 3 to 5 years, or in the next 30 to 50 years, far different from most Indians. And an optimist by nature, and I reserve the right to be wrong.
So are you of the view, I'm just going to spend a minute on some of the points which you raised, which is the agriculture reform, since you spoke about it so extensively. Do you think this is going to completely change the dynamics of the entire supply chain, cold storage, rural income, everything?
Why will it not? Wherever we have realized one thing, that wherever bureaucracy is removed and freedom is given, and people say it has been, it has been done in Bihar, but nothing happened. But see, I'm a company or I'm an individual. I want a large wicket. I don't want to go only Bihar. Today I envisage a time, today the farmer in West Bengal gets 4 rupees per kilo of potatoes and we pay 40. Think if he gets 10 and we pay 25, it's eminently possible. How much of the value added in agricultural products in India is among the lowest in the world? How much wastage there is? So people will improve this. It's not going to happen overnight. It's going to take time. But it is surely going to happen. And a combination of all these events are going to lead to the bursting of growth. And that's what I think markets are silently recognizing.
Do you think Indian government has done the right thing by banning the Chinese apps? It's the fight of tech or the intellectual property right which is happening everywhere now?
I don't know that whether what should be done or what should not be done. But I know one thing, that we should show some aggression against China.
Now, government is they've really unleashed Atmanirbhar campaign, and there are specific pockets which are getting addressed. Our understanding is that this time the on-ground work really has changed. How do you think this could be different than Made in India campaign, which was launched, let's say, 5-6 years ago, where intention was there, but implementation was not there?
I'm more interested in the reforms and the ease of doing business than Made in India and Atmanirbhar. What we need is ease of doing business, period. We are well placed in pharma and in software, right, with the agriculture reforms and with the manufacturing, facilitation. I think we can. A lot of people don't know that agriculture is one of the largest value-added exports out of India. See, in exports, what is important is value added. If I import a 80 rupees diamond and sell it for 100, my export will be 100, but my value of it is 20. In agricultural export, if I export 100, my import is not even 5 rupees. So what is actually contributing to the economy of the country is 95. So I think, I can say I'll make a parrot, right? But mere bheje mein, whatever goes into my mind doesn't come out easily. And things don't go into mind easily. So I feel we are underestimating. I realize as Indians we have not done well. We could have done better, right? But I think the golden years are ahead of us. And I'm not talking about the stock market only. I'm talking about Indian growth as well.
So one side, everybody is optimistic about things turning up. Companies are also indicating that the pre-COVID demand levels are almost normalized for autos and FMCG companies. But on the other side, banks are getting completely smashed, which are a play on economy.
Because the markets don't like uncertainty. And the kind of bad debts that will be needed, right, will be only known after the moratorium period is over and the time to pay the moratorium period is over, moratorium interest is over, and the time to restructure is over. So there, I think markets may be anticipating the worst. So they want clarity on that. I think that is the main reason. Once that clarity comes, how good or how it is bad, I don't know. I think banks will come back.
But do you think this kind of a gap between, let's say, retail banks and corporate banks, which has got created, I'm using HDFC Bank and SBI or HDFC Bank and ICICI Bank as an example, do you think that could exist?
I mean, I would say that, see, there are certain other problems with public sector banks, which is, people don't believe in the government ownership of assets. I think that is also, I think there are public, I think State Bank is unbelievable. I mean, I don't think the difference is justified. There has to be a difference. HDFC Bank is a leader, has showed consistent growth. There is no question about it. He's a leader by far, and growth and performance is unbelievable. But I think that the variance is very high, and State Bank is and I think a lot of it is because of government ownership.
We've seen the first wave of shakeout or consolidation in the banking sector where private banks gained and PSU banks, they lost market share. Now, is there a possibility of a second round of shakeout where the old banks like a Federal, Coronovarius, they will shake out and they will lose market share to the big banks?
See, my personal opinion is that when the economy does well, right, it is anybody who has a deposit franchise who will survive and grow. Because how can you lend if you don't have a deposit franchise? So if a deposit franchise, so therefore I feel the public sector banks also, some parts of them will do well because they have good deposit franchises. So it's only a man who can garner deposits who can lend. So I don't think those banks are going to easily. See, consolidation is a natural process of economic evolution and growth. So that may happen, but not necessarily they will lose market share.
What role do you think technology will play? I saw a tweet from Uday Kotak. He says, look, the future of the world is with fintech and banks which have technology and platform. Should we brace ourselves for that?
Well, I think most banks are already using the technology which fintechs are using. Today, I can open a bank account without going to anybody from my house. I can get a loan sanction from a bank sitting at my home. So I don't know how fintech is different from a bank. Please ask Mr. Kotak.
Now, pharma is the only sector, Mr. Jhunjhunwala, where we've seen a EPS expansion and a P expansion. Is it a coincidence that it has only happened after the COVID crisis?
I don't think the COVID crisis has caused the P expansion or the EPS expansion. But I think I don't think COVID has caused it. It was overdue. I'm shouting from 2 years. I was 2 years early.
You're a foodie, so let me use an example which you always say, which is a buffet. So for somebody, let's say, who has to understand the pharma rally, are we right now in the starter mode? Have we reached the main course or are we reaching desserts?
Well, I think we're just finishing drinks.
So
just, or if you have to have drinks and dinner and a dessert and then you have some brandy and some cigar, then we are just having our first drink, second drink. So I think it's going to be a big rally. It's going to be really big, I think. I could be wrong, but I'm very bullish.
What are the data points which are convincing you that we are in a structural bull market?
The fact that India's growth will go up and there is underexposure of equity in India. And the percentage of, see, when you compare India to America, remember, the percentage of profits to GDP is very, very low in India. Gone down from 8.5% to 4%. In America, it's at the highest ever. In American wealth, 32% of wealth is equity, household wealth. India, it's not even 5-7%. And we have a huge pool of savings. And we have created the institutions by which we can, and regulated the institutions by which we can tap these savings. So, I mean, that's what makes me bullish.
I'm just coming back to the big picture once again, but allow me to come back to pharma, because pharma is a complicated sector. I'm not going to get into stock-specific recommendations. I respect it. But, pharma, you've got API, you've got generics, you've got specialty chemical. Where do you think the growth in pharma is going to be the highest?
I think growth highest will be in India. But I think that's the section of the companies which are catering to India are now very well valued. While the companies are doing the API and the generics, I think will have both earning expansion and P expansion. Whereas for the companies focused on India, there will be earning expansion, but I think there is scope for limited P expansion.
So how will this pharma rally be different than what we saw, let's say, 7-8 years ago?
Well, I don't know. I think it lasts much longer.
Okay, great point. Mr. Jhunjhunwala, last 10 years, the global market conditions have not been bad. Commodity prices have been low, interest rates have been low. We've had reasonable inflows into India. But frankly, if I look at the last decade, handful of companies have only become good and great. Bajaj Finance, D-Mart, Indigo. Why is that?
They have become
great companies. You've not had outstanding companies in last 10 years.
They have outstanding promoters who understand business and who understand that cost control is the key to markets and competitiveness. And then honesty and integrity, straightforward approach.
Lot of innovation and good companies are now taking birth in the private market. Do you think even though India will grow, innovation will happen in the private market? As a result, public investors will find it difficult to make money?
Not at all. There is always scope to make money after a company matures. See, also the people who are investing in the private companies or unlisted companies or startups, there is far greater effort involved. Right? I spend far more time on my unlisted portfolio than I spend on my listed portfolio. And second is, even after they're listed, you'll be able to find good investments.
Now, the Shapoorji Pallonji group has gone on record and said, look, we are interested in selling our family silver. We've got cash finance issues, has taken Tata Sons. Do you think the Tata should buy it back? And if they buy it back, where will the money come from, sir?
Well, the Tatas know best. But I think they will buy back somehow. If they will not, having told the court that they're ready to buy, they would not have, without a plan in mind, they wouldn't, that's what my judgment is. They will not tell the court without having some plan in mind that they will buy it.
If they go ahead with using the cash flow of other Tata group of companies, largely TCS, could that derail the Tata recovery process which has started in other group companies?
No, I don't know how. I don't think they're going to buy from the cash flow of TCS. There is a possibility that you can buy it by selling a stake of TCS, but you can't buy it by using the cash flow of TCS. TCS cannot buy Tata Sons shares because it's a subsidiary of Tata Sons.
Yeah, fair point. I missed that one. So is it just a coincidence that you've taken outsized bets in Tata group of companies even after COVID, Tatacom, Indian Hotels? Just a coincidence?
No, it's not. It's got nothing to do with what Shapoorji Pallonji is doing. It's having to do with the fact of the opportunity of the company, the area it is in, the sheer management changes, the sheer emphasis on cash flows, right? So I have not taken a particular company or bought it because it's a Tata Group company. I have bought it because of the company and because what the Tatas are, Tata Sons now is doing is the emphasis on cash flow and the correct business policies.
It was in 2018 you said that the best thing that has happened to Tata is that Chandra has taken over. And you said you were confident he will deliver. Are you now excited that almost all group companies have turned around?
Well, there is still time, but I think if you have to run a marathon, you have not run 2 kilometers. We'll be surprised at what the Tata's Group will do in the next 5 years. That is my personal opinion. I have reserved the right to be wrong.
So what is your view? I mean, what could happen there?
Nothing. The companies will do well. That's what will happen.
In the last AGM of Tata Motors, Chandra said that they are aiming to make Tata Motors debt-free. Is it possible to make such a large business, such a big company which has a lot of debt-free?
Of course. Impossible is a word in the dictionary of fools here. And Mr. Chandra is not used to talking out of his hat. He knows what he's talking. He won't talk on anything in an AGM unless he has some plan for it.
But if I look at the tone which we're getting from large corporate houses, and I'm using Reliance as an example here, Reliance is deleveraging. Tatas are looking at deleveraging. What does that just tells you about the risk appetite the corporate India and the big houses are ready to take in terms of leverage bets?
They will all see, according to me, this is the best time to invest. Right? And they are deleveraging where there is, excess leverage. But I'm sure both to Mr. Ambani and to Mr. Tata, if some opportunity comes up, which is great, they are going to invest.
You've always said in the past that when a bear market bottom happens, a shakeout happens and the leadership changes. But that has not happened in the US market. The shakeout happened and it is back to the Apples and the Googles and the Facebooks of the world.
But where is the bear market? Did we have a bear market? There was only a correction in the bull market, I think. There was no reversal of the bull market.
So what really, I mean, where do you think those companies are? I mean, are they reaching the end of the climax? And if they are, what could be the implications of that?
No, my personal judgment is that unless their earnings growth reverses, see, Amazon may correct 20% from the top. It may correct 25%. But that is nothing in relation to what Amazon has gained. So as long as the earnings growth continues, I don't think there will be any reversal of the bull market. These stocks are.
Indian IT companies have also enjoyed the spot in the sun. HCL Tech came a couple of days ago and said, look, we are changing our guidance, we're revising our guidance upwards. Infosys also seems to be saying the same. Have the stars really turned for Indian IT companies, or they at max would be early double-digit growth companies?
No, but even early double-digit with say 15% earnings growth at these sizes is not bad. And the question is that in the digitalized world that we are, there is a fair, in my opinion, there is a fair amount of certainty in that earnings growth. And also remember one thing, that the cash flow of these companies is very high. I mean, if you look at TCS, his cash flow is as good as his profit, because he has to invest very little. So that is why the P's, they get better P's.
But do you think in terms of the current valuation, they're fairly priced, and now the price growth in IT companies would be a function of EPS, not PE?
Yeah, but if you can get 15% growth in a company whose market cap is 8 lakh crores, there are a lot of buyers in this world, my friend.
Rakesh Jhunjhunwala always loves to quote a very simple example which connects very well with everybody. Market price is a function of EPS into PE. Market price is a function of EPS into PE. Right. Where do you think in this market, Mr. Jhunjhunwala, there is scope for PE expansion and there is scope for
What could happen if you have a company called X? Now today you feel the price is very high. And next year what could happen? It could perform very well, but the price may not perform. So in the stock market, what happens? Buy on the rumor, sell on the news. You understand? So we could be. See, what I feel personally is that, first of all, the recovery of the COVID is going to be faster than what people are still anticipating, right? Second, the damage while the COVID is there is not as much as people thought, right? Third, I feel the recovery is going to be very, very strong. And I think that's what the market is thinking. And also, Nikunj, we cannot forget the technical factors of interest rates and still low participation. I mean, you have 1 million demat accounts opened last month in India. You're going to have 10 million demat accounts open in the next 1 year. right? And plus the reduction in interest rates in India and worldwide is for real. So the effective yield on debt post-tax is 4 to 6%. If I can earn 12 to 15% equity, I'm a king.
While you say that the demat accounts which have opened are less, but IPO markets have picked up, globally Robinhood traders have come in, and historically famous investors like you, they always use IPO market excitement and retail participation as a benchmark to judge the mood. So aren't both those indicators indicating something?
No, I don't know that. See, the Robinhood traders had a good shake-up in 2 days. 2 days, I think half of them would have gone home. And I don't see the mass participation of Indians. And see what happens, the market really booms when people really leverage, and they really leverage when they made a lot of money. Some nafe ka daru hai. Right? So it's too early in the market. And there is I think those who are believing in the market are far in a minority compared to those who are not believing.
So I will not be wrong in saying that with each passing day, the number of non-believers in this market is only increasing. That's a 52-week high which is made every day.
Right. So people, if they don't believe, they don't participate. And Nikunj, see, we have gone from 7,500 to say 10,000, say 11,200. Suppose market makes a range between 10,500 and 12,000 for the next 6 months. What's wrong?
One company globally which has surprised everybody, which is the Tesla, the market cap that has got created. Are markets telling you that EV is the future, or that is euphoria which is happening there?
I think there are a lot of technical situation there. I don't think this market about Tesla can last. But that doesn't mean I'm going to short it.
But do you remain optimistic that EV will come, but in India it is still Dilli dur hai?
EV will come, and it will come at a faster pace than what. Because, see, I think a lot of people worry about what will happen to this earth. I have thought very simply, and I think very broadly, that 2 challenges are there. One is we cannot go on consuming the resources of the earth as we are. And that is driven by population growth and consumption. And second is climate change. I think both will be corrected because maybe in 25, 30 years, we'll be using only clean energy. And in 25, 30 years, we will peak in terms of population. And everywhere the population is growth is turning out to be lower than what is being anticipated. So I feel we are going to have clean energy, but I don't feel that necessarily the entire market will belong to Tesla. I think Mercedes or say Volkswagen or JLR also is competent enough to make electrical vehicles and sell them. And has a far better network than Tesla to sell them.
Last time when we spoke, you mentioned about 2 bombed out sectors where, according to you, and this we are talking about June, things have changed after that, was hotel and infrastructure. Are they still bombed out?
Yeah, I think they're very, I'm investing there. I think there's a great opportunity.
One would like to draw your attention to why everybody is saying value investing is dead, whether it is PSUs, a stock like ITC, State Bank of India. I'm just using that for reference. Is it true that value investing is dead?
No, I personally feel that all these stocks will really gain in the second stage of the bull market. Because when the valuation differences will become outlandish. See, public sector basically is technically the problem is the government not having a very well-defined disinvestment program. And Hindustan Aeronautics is a great stock. Government today owns 85%. Every year they come and sell 5%, 7%, 8%. So then there is, how will the stock gain? Second, also because of the past, you sold HPCL to ONGC. So, all these things are not liked by the market, and therefore there is uncertainty. So I think that is the ownership is the prime reason for, according to me, for the discount in the public sector.
Commodities are also bombed out. Is there a mean?
They are recovering now. And the fact is that commodity earnings do fluctuate. No? If I look at Liver's earnings, they are linear. If I look at Vedanta's earnings, they are not linear.
Do you think a silent time-wise correction has started in FMCG stocks? Nobody is talking about it today, but 10-12%, all these stocks are down from the highs.
But if you gain 60% or down 10%, what is it? Nothing can be absolutely linear in price. There has to be a resting point. But I think they are fundamentally in a bull market, and they will remain in the bull market. Because see, the good quality companies in India are very few. Those who generate true cash have integral management and share it with shareholders, and have good competitive position in the market, and have large markets. So these are the companies which are getting the Ps.
We spoke about defense manufacturing in 2014, and that time we said, look, I'm betting on Indian defense manufacturing to become a large sector, and India could actually start exporting defense. That time it was unreal, but now parts are coming together. Is that idea which you would be pursuing?
No, there are not many private. I don't want to go invest in the public sector ones, and the private sector ones, there are not many. But I think India will become a big hub of defense manufacturing.
What are the data points which you are tracking right now, which if they reverse, will change your view?
Sentiment. Or the COVID turns out to be far, far, far worse than what we think. See, Nikunj, it's not like, Mr. Buffet says, it's not profitable to bet against America. It is not easy. It will not be easy to reverse India's growth. That's my belief.
Certainly. But let's say, I'm putting a hypothetical case here because we don't have a breakthrough on the vaccine yet. If the vaccine, God forbid, we all are praying that it should come early. If the vaccine is delayed by another year, distribution is delayed, will markets lose patience?
It's difficult to predict but I don't think the markets are contingent only on the vaccine. I personally think maximum after March things will be absolutely normal. Because there is very good chance to develop herd immunity. You'll get a treatment where it will be treated like a flu. Don't forget 25 lakh Indians have flu every day. Right? So therefore various factors can play out. A medicine can come, the ability to treat this disease has vastly improved over a period of time.
Looking at the government finances right now, for an investor, is one better off not buying into government-dominated sectors, infrastructure, road construction, because there is no money?
No, but also the number of players have come down like anything. No? And earlier people took contracts on the basis that government will pay. Now they don't take the contracts only. So government will learn to pay.
As a long-term investor, Mr. Jhunjhunwala, you position your capital to benefit from future trends. That's what every investor does. So if one has to look at the shape of the Nifty, we are in 2020, in 2030, 2028, what could be the shape of the Nifty? Because every 10 years it changes.
Next 10 years, what will happen?
Yeah.
It will be higher. How much higher, I don't know.
No, I'm not talking about the number here, sir. I'm talking about, let's say, in terms of a sectoral contribution. When you started your career, commodity was a large part of Nifty.
I think pharma contribution will increase. That much I can tell you. IT contribution will increase. Banks will have a very good contribution. Right? Manufacturing will also, I think in India, everything is going to progress, Nikunj.
But somewhere when we look at the consumption in India, and you've been making a point that, look, India per capita is going to go higher and bin spending is going to come. Our per capita is still stuck at $2,000, $2,200.
Yeah, but, it can improve dramatically. Why can't India be a $10,000 a year per capita country?
But to reach there, don't you think something massive has to happen on ground?
No, in India, nothing massive is going to happen. Everything is going to trickle. What I'm saying that trickle now is now becoming big, massive.
When do you think pricing and discipline will come back to the telecom sector?
Well, you please go and ask the three players.
I know you have views in the telecom sector, but as an investor, what is your view?
I have no idea. Difficult to predict.
Difficult to predict. Do you think in general, equity investing is not that lucrative what it was because of tax? There's tax on dividend. There is long-term tax. There is short-term tax. A couple of years ago, it was not there.
I think it remains lucrative in spite of the tax.
Somewhere do you think
the alternatives are also fully taxed? A dividend is fully taxed now. Capital gains is still concessional. So to that extent, it is okay, but of course, it is far lesser than earlier.
You've been making a point from several years now, almost half a decade, more than half a decade, that real estate you should buy if you want to live in a house, don't invest in real estate. Is that a bombed out space you would like to go now?
I personally think, real estate will also bottom out in India, right? But I'm not very bullish on prices. And frankly, I never apply my mind to investing in gold or real estate. So I never think about, but to my intuitive feeling, I think real estate prices have bottomed out, except in the highest luxury segments. And I think gold, I'm very bullish.
Are you bullish on gold because of low interest rates or anything else?
Combination of factors. The biggest bullishness is, I think, that see a lot of the emerging world, China, Russia, they have large foreign exchange reserves, and I think for strategic reasons, they don't want to be, they want to limit their dollar exposure. So their percentage of gold in the reserves is going to go up constantly. Second, also, it's the best hedge in an uncertain world. And the fact is that a lot of people suspect that this low interest regime, they feel that, it's at 1% interest, 0.5% interest, better to hold gold. So I don't think the lure of gold is going to go away.
Some of our common friends tell me that when markets fell in March and April, Rakesh Jhunjhunwala was like a kid in the candy store. He got excited and he really committed a lot of capital. Was that true that you felt like a kid in a candy store?
I think, Nikunj, is best if you don't discuss my trades.
No, I'm not getting into what you bought. I'm just saying that...
What I did and when I did, why should we discuss that? How is it relevant?
One thing I've been wanting to ask you, Mr. Jhunjhunwala, is that you've always gone on record and said that Radhakishan ji is one of your mentors, is one of your friends. But frankly, if I look at his portfolio, your portfolio, even though you're constructing...
nothing in common.
Why is that?
It's a coincidence. Or maybe it's a difference in the approach to investing. He likes to invest in the potentially safe and mature companies. I like to, if you invest in all the small cap, mid cap, also he sells very fast. Right? And I tend to invest in the more riskier companies.
Do the rules of investing, have they changed when you started your career in 1980s versus now? Because that time interest rate, technology, everything was different.
No, I don't think the rules of investing have changed. The learnings of investing for me have been more. What I've learned and the pace at which I'm learning today is far greater than the pace at which, with every passing day, because of an attitude of having an open mind. And because I have the 30-year experience, the pace of learning is far greater and faster than it was earlier. I'm still learning.
So what is one thing you've really learned as an investor in the COVID crisis?
In the COVID crisis, I think what I've learned as a human is that we will shoulder all crises. Humanity will fight all crises. Nothing's going to happen.
Do you think optimism is the most important thing for anybody to be a successful investor? You need to be optimistic.
Absolutely.
So how come you have so much of infectious optimism always? What influences you? What gives you this optimism every time I speak to you?
Well, because my judgment says, कि आएगा, हमारा दिन भी आएगा. And God has been kind to me. He's made me successful. I think successful people tend to be more optimistic. They always look at the brighter side of things.
Earlier, a couple of years ago, information was not freely available. Now, a lot of information is available. People are sharing their views on Twitter. Blogs have been written. Do you think, in general, investors have become far more aware but far less patient?
I don't know, but now there is so much information, difficult to keep up with it. That I know. And investors, see, the question is, the importance is the data. More important is the analysis and conclusion. So the data available is huge and is transmitted very fast. But was the real skill rise in the analysis and the conclusion?
You're a very quick decision maker. And I've heard stories where you've taken a decision to invest 5-7% in a company in less than half an hour.
Yeah.
How do you make up that template in your mind?
Well, they say no. When I told Rekha, I said, I'm going to get married to her. I made up my mind in 5 minutes. So, I just talk because, see, the mind unconsciously is always working. We invest in the realm of possibilities. If I feel the valuation is right, the opportunity is good, then what do we wait for? I bought stocks, VIP, I bought it, say, from 12 rupees to 30 rupees. Right? I bought Lupin in 7 days. So if you feel the opportunity is so large, what are you waiting for? And remember, it's uncertain world. It's like marriage, you have to decide. It will be known only after the marriage. You can't keep vacillating.
So you decided in 5 minutes to marry Mrs.
So
Jhunjhunwala.
no analysis paralysis.
Yeah. But you decided in 5 minutes to marry Mrs. Jhunjhunwala. When did she decide? How much time did she take to
I
say?
never asked her.
Mrs. Jhunjhunwala, now that you've touched 60, how will life change for you?
Well, I think I've become far more mature, far more softer in my approach to other humans, right? Later realization that we have limited life. We have to do what is needed for good health. And that I got to accentuate my efforts to donate money. But I think being more considerate to other humans and also realization that I have other goals in life other than earning wealth, which I must fulfill. Whatever it may be, playing time with my children or traveling or, having some other hobby or, giving. I mean, I should pay attention to all the other factors, all the other things in life that I want to do.
I got a forward couple of months ago saying that Buffett has made 90% of his wealth after he turned 60. You're 60, sir. So I'm not counting about wealth, but the best of RJ is yet to come.
Well, that will always be there until my last. That hope will always be there. That is why there is that optimism. If that hope dies, the optimism dies.
What is the first thing you will do when you will step out of the house? I know you've been staying at home right now when the COVID crisis gets over.
Go to Golden Dragon and have dinner.
So before we wrap, and since this is something which millions of investors have been wanting to understand, if you have to talk about a mega bull market, what do you think would happen in this mega or the mother of the bull market? What could be, because Nifty doubles or index doubles, it doubles in every 3 years.
See, Nikunj, to numerically go into all this is very difficult, right? But what will happen is that equity will give a rate of return far greater than other assets. That is what is going to happen. And, you can surely see 12 to 15% nominal, earnings growth, GDP growth in India, according to me, as high as 12 to 14% on a continuous basis, which would lead to 20-25% corporate profit growth, which could be explosive for the market.
Why do you think markets have gone wrong? And last question, Mr. Jhunjhunwala, have been so wrong in predicting earnings? 3-4 years now.
Well, because I don't think people have been wrong in predicting earnings. They have been wrong. We have been wrong in predicting the kind of earnings that will come.
Well, sir, we've covered a range of topic today. You've given us almost 45 minutes. We've spoken about your views on markets, life in general. So stay safe, and I look forward to see you very soon and meet you in person. And thank you very much once again.